Hello, my name is Fredrik Iverson. I cover the consumer sector with ABG. And with me here today, I have BHG Group, and namely Adam Shatz, CEO, and Jesper Flemme, acting CFO, who will give a approximately 20-minute presentation followed by a short Q&A. So with that, I will leave the floor to Adam.
Thank you, Fredrik. And I will be presenting, right, Fredrik, as we agreed. Is that right?
Yes.
Excellent. So let me share my screen there. Good morning, everyone. Jesper, our CFO, and I will take turns presenting this morning. I'll go through the first section, introducing BHG. I'll then hand it over to Jesper, who'll take us through the financial update before he hands it back over to me to summarize. And then we'll launch into the Q&A session led by Fredrik. So summarizing our position today, we are the largest online consumer retailer in the Nordics. We have a sound business mix, both segment and geography-wise. We focus fully on the home improvement market through our two operating segments, DIY and home furnishing. And within this space, we are the largest online player in Europe. We're particularly big in our Nordic home markets, but also have a rapidly growing presence in a number of Eastern European countries. Our financial track record of consistent strong growth, coupled with profitability and cash flow generation all along the way, bears out the strength of our strategy as well as our business model. On an LTM basis, our net sales amounted to 8.3 billion SEK, and our adjusted EBIT margin stood at 7.2%. As Jesper will show, our growth was accelerating already in the quarters leading up to the pandemic, and growth has since further accelerated on the back of changed consumer behaviors, clearly favoring both the online channel as such, but also leading to consumers dedicating a higher share of wallets to home improvement, that is, our categories specifically. And our business model and position are characterized by a leading product portfolio and best-in-class digital capabilities, which allow us to base key decisions on the heaps of data that flow through our systems, including such decisions as optimizing pricing and driving conversion. Our scale gives us strong purchasing power and has enabled us to have a high and growing share of private label in our sales mix. We're asset light, we have low capex requirements and a neutral net working capital, all of which enable highly scalable growth. A couple of words on our markets, the home improvement space. This is a very large market. The net sales that we've enjoyed over the past 12 months of 8.3 billion SEK should be viewed against the backdrop of a Nordic online market for home improvement, which is worth some 35 billion SEK, and which in turn forms part of a total addressable market in the Nordics worth some 300 billion SEK, which finally, of course, is dwarfed by the almost 20 times larger EU market. And with online penetration still standing below 12%, but increasing steadily, the bulk of the growth in the total addressable market will continue to accrue to the online segment for many years to come. The strategy remains focused on four cornerstones, which I'll very briefly touch on. Firstly, a continued expansion of our leading product range, today comprising around 1 million SKUs. Secondly, scale and a high share of own brands in our sales mix, with our private label range accounting for roughly half of sales today. Thirdly, creating the most appealing shopping experience and leading in the digital realm. And finally, offering the market's best professional guidance, service, and support. The first two pillars of our ecosystem put the product offering at the base, while the second two ensure that we stay customer-centric. And finally, on this slide, we utilize M&A as a core part of our execution toolkit to accelerate our growth trajectory. And then continuing on the topic of acquisitions, since our journey started in 2012, we've completed in excess of 30 acquisitions. And as this timeline shows, we've acquired businesses within both segments. In fact, the home furnishing segment was built around a platform acquisition, as was our entry into the DIY markets of Finland, Denmark, and Norway. Last year, we made 6 acquisitions, and so far this year, we've made 2, those of Hemfint and Slipo. I'll now hand it over to Jesper, who will walk us through the financial update. Over to you, Jesper.
Thank you, Adam. Slide 9. Net sales grew by almost 40% in the third quarter, reaching 2.3 billion SEK. Organic growth amounted to 32.3%. Adjusted EBIT came in at 194 million SEK, corresponding to an adjusted EBIT margin of 8.5%, and cash flow from operating activities was marginally positive despite the exceptionally strong cash flow of the previous quarter, which led to a peak in supplier payments in the third quarter. Year-to-date cash flow stands at 774 million SEK, and our financial position is solid. We have been well placed to capture the demand resulting from a continued high consumer interest in online shopping in general and in home improvement specifically. The do-it-yourself segment has been the clearest beneficiary from the accelerated demand in the wake of the pandemic, with our major country platforms growing well and some of our niche destinations, not least those with a significant proportion of sales coming from our own brands, growing exceptionally. The home furnishing segment has basically followed the path from recent quarter, delivering robust growth and profitability. Slide 10. As Adam has just shown, we have combined organic growth with acquisitions since we got going back in 2012. And when it comes to the organic component, we are now reporting our fourth quarter in a row with growth in excess of the 15% level, which is our communicated target over a business cycle. Again, organic growth in the third quarter amounted to 32%. The home furnishing segment grew by 29% and the do-it-yourself segment by 35%. We believe that these are above average market growth rates and that we consequently strengthened our market share in both segments. Next slide. Continued favorable market conditions and both segments' strong position contributed to the EBIT margin nearly reaching the all-time high level of the second quarter. Strong top-line growth at 39.7% resulted in strong operating leverage, translating to a gross margin increase of 57% and an EBIT increase exceeding 100%. The gross margin improved by 2.8 percentage points to reach 25.9%, our highest gross margin to date, and the product margin amounted to 37%. Just as in the first 6 months of the year, the gross margin improvement was to some extent driven by continued focus on cost and process efficiencies in purchasing and logistics, as well as a growing share of sales from our own brands. However, in the third quarter, the gross margin improvement was also driven by strong demand, which resulted in fewer campaigns than usual and positive currency effects from the stronger SEK. Moving on to our financial position. The group's net debt amounted to 86.5 million SEK at the end of the quarter. Our strong year-to-date operating performance meant that net debt in relation to LTM adjusted EBITDA ended at 0.1 times, a significant outperformance of the medium-term financial target range. Our financial position is strong. On top of our liquidity at hand, we had unutilized credit facilities at the end of the quarter of 434 million SEK, which means that we can continue to execute both organic and inorganic growth initiatives. Back to you, Adam.
Thank you, Jesper. So some key metrics to round things off, describing our position today at a glance. On the left-hand side, we are a fast-growing business. Our CAGR since 2014 amounts to 40%. And in this period, EBIT has grown well in excess of 100% per annum. Our EBIT margin, as I mentioned, on an LTM basis, stands at 7.2% and is generated by our over 80 customer-facing web properties. And now moving over to the right-hand side, these web properties have been visited well over 200 million times year to date, generating some 2 million orders from customers residing in 19 countries across Northern and Eastern Europe. And our product portfolio is leading in terms of its breadth and its depth. And finally, with strong total and organic growth, as well as expanding margins, we are on the path to hitting our midterm financial targets, including reaching 10 billion SEK in net sales. So with that, I will hand it back over to you, Fredrik, to lead us through the Q&A session.
Thank you, Adam and Jesper, for a good presentation. A couple of questions from my side then. We saw Amazon entering Sweden a few weeks back, and I'm just curious to hear what your take on Amazon is, and in particular maybe what product categories that you might be facing accelerated competition in.
Mm-hmm. Yeah, you're right, of course. Amazon launched on the 28th of October, I believe it was. And by that we mean they launched their .se site. Swedish and Nordic consumers have been able to buy from the German and UK sites actually for well over a decade. But the .se launch was on the 28th of October. And the initial offering that we see is actually very much in line with our expectations, with a very limited overlap with our categories. There is some overlap on some power tools. There is a limited overlap within the bathroom category. But again, overall, it's more or less exactly as we expected in terms of the product portfolio, even though the launch itself was a bit error littered with the poor and funny machine translations of product descriptions, etc. We see these as initial teething problems for Amazon, and I'm sure that they'll continue professionalizing their presence in Sweden. But more generally, also taking into account the launch itself, but looking at the experience from other countries where Amazon has been present for a long time, we are not particularly worried. We have great respect for Amazon, but again, not particularly worried. And one reason that our founders chose to build BHG around our current categories was because of the conviction that these categories are much more shielded from the sort of international competition that was bound to ramp up at some future point in time when we got started in 2012. And online home improvement retail tends to be dominated by specialists also elsewhere. In particular, then the part of the market that deals with large, complex, bulky items and/or items that are sort of inspirational and require the sort of inspirational browsing to convert customers successfully.
That sounds reassuring. Another question regarding M&A. You mentioned that's obviously a big part of your agenda, and you've done a couple of this so far this year, but maybe not as many as some have expected. So first question on that, why is that? Is that simply due to COVID and a more complicated M&A arena? And secondly, what should we expect looking into the coming 2 years?
Yeah, well, basically, yes. The pandemic has had a very positive impact on growth, especially within DIY, as Jesper walked us through. But the other side of that coin has been that it's put some friction into the M&A efforts of ours, and I think other players in the market as well. I'll just also say that in addition to the 2 acquisitions that we've completed this year, we closed the acquisition of LS-bolagen on the very final days of 2019. And the exact timing of acquisitions is always difficult sort of to predict. But we were a bit worried about M&A activity in Q2. And I think what led to this friction that I referred to was actually a couple of things. One was that it was more difficult just practically to meet. And the meeting, at least initially in person, is pretty important, as I think we all acknowledge. But also with the general increase in demand for e-commerce and e-commerce for home improvement specifically, we were extremely busy. But also the potential partners and parties that we were in discussions with were also extremely busy. in just sort of handling the effect of the spike in demand. And finally, I think there was also an unusually high degree of uncertainty about where valuations would go, which also perhaps led to some delays in the machinery. I would say now that things are pretty much back to normal or reverting back to normal. We have a strong deal flow. We're in a number of discussions at various stages. It's always difficult again to predict when we'll be able to close the next one, but I am really confident that we'll continue to keep a high pace and that we'll continue to benefit from M&A as a complement to organic initiatives.
Excellent. Then we will keep our eyes open. And maybe last question regarding the financial targets. Jesper, you touched upon it, but you're already there when it comes to the margin target, and in terms of the 10 billion SEK in sales, you are approaching it swiftly. So should we expect an update on your financial targets anytime soon?
Well, what we've said internally is that we want really to be within touching distance also of the 10 billion net sales target. We are already ahead of the midterm EBIT margin target. But again, we want to be within touching distance before we update the targets for the next 3 to 5 years. What I can say is that when we do feel that we're sort of feeling that 10 billion very tangibly, we will of course go about the updated target setting process by looking at the combination of the sales growth target and the EBIT margin target. To some extent, there is an inverse relationship between the two. And I can just sort of generally say that the 7% EBIT margin is still a very good level. I think it's an industry-leading level for an e-commerce player. And we definitely will not be setting a margin target that we feel to any extent compromises our ability to continue growing rapidly. But this is another space, Fredrik, to watch, because I think that, again, as I've said, we are approaching that touching distance between us and the 10 billion, and then that is when the target update will come.
Yes, we're excited to follow your journey towards that 10 billion to start with. So with that, thank you very much, Adam and Jesper, for giving us this presentation. And again, looking forward to follow your journey. Thank you.
Our pleasure. Thank you.
Thank you.